This is the Kestrel Country Podcast, where we discuss the people, places, and events all around Kestrel Country. Hello and welcome to another episode of the Kestrel Country Podcast. I'm your host, Mike Church, joined here once again by my lovely wife and co-host, Catherine.
Hello, hello.
And we are almost to Easter.
Yep.
Beautiful. We love it. Love springtime, even with snow here in North Idaho. It's gorgeous. There's a lot of green under that snow that's going to be revealed any minute now.
Yep, and so far, hopefully the bulbs all make it and don't just frost out. But It hasn't been super cold. It's been, just cold enough for this snow.
Yeah. So we've got another real estate podcast of sorts today.
Yeah, Jason Croston.
Yeah, Jason Croston with P1FCU, Potlatch number one.
Federal
maybe it's not
credit union?
No, something. It's not federal. He talks about
Oh.
that. They changed to state charter, I guess. So,
Okay.
But yeah, P1FCU, local credit union here, to talk a little bit about what they do, differences between credit union and banks. Talk about some of their offerings. Talk about construction loans. That's one of the things. I think he is the construction loan officer there. So talk some about construction loans, which will go well for a lot of folks who are looking to build right now. It's challenging. It's expensive. We talk about that, but there are some good options here for some construction lending.
Well, especially as the previous episode to this is Woodbury, and they're building a lot of theirs themselves. But we also talk about Eddington, which was a previous discussion with Andrew Crappy-Schatz. So there's lots of lots coming available. And
yeah, we've got a development coming,
Sunny
number
side
of lots on the south end of town as well.
So just having it in your mind about what it takes to build and going through all the steps, because getting yourself a loan is a lot of work. And then if you're adding building on top of that and turning it into a construction project, it can be very daunting. But there are lots of good options for loans out there. That's why we've been having lenders come on and really try to help just broadcast what you can do as a buyer.
Well, it's on a lot of people's minds, obviously, right now with interest rates having been so low for the last couple of years and starting to come back to a little bit higher rates. Still historically very low, but it's on people's minds and they're kind of wanting to know what their options are and that kind of thing.
Yep.
Interestingly enough, I was just talking with Tim Kirkland over at Zions as well about some of their options with a 10-1 arm, different things that I think just as the landscape is changing, it's good to look at a lot of different options because, it may not be that just what you typically think of as the loan that makes sense is the best fit. So
absolutely. And you might have never considered construction before, but just simply because we are so low on inventory, it might be one that makes sense for you.
Yeah. Well, I hope you find this interesting. Good to have Jason in the office and good interview with Jason, lender and local volunteer firefighter. Talk a little bit about that too. So enjoy this episode that we've got coming here with Jason Croston. Well, Jason, thanks for coming in. Jason Croston, P1FCU.
Yeah, thanks for having me.
Yeah. So first off, just tell us, I guess tell me a little bit more about yourself. So you from the area? You around here long term?
Yeah, well, I grew up in Spokane, Washington, so not too far away, but I've been here for 20 plus years. I moved here in 99, so I'm pretty much from here now.
I know. Although I don't know, for locals, you might not ever really be from here, right?
Yeah. My wife was born and raised here, so it's a little different. So, I got involved with community doing volunteer stuff. It's pretty close to right off. I've been on the fire department here, volunteer fire department here for almost as long as I've been here and other community things. So I just kind of really sort of fell in love with the place and never left.
Yeah. So the fire department that's obviously here as volunteer.
Yep.
So was that something you were doing before you moved to Moscow, or was that something that you got into when you were here?
Nope, just got into it when I was here. Had a client of mine that was in it and said, "Hey, you should come check us out.
Nice.
That's
That's
kinda
awesome.
That's how it started.
Yeah. Cool. How much time? I mean, I know it's off topic a little bit, but how much time does that kind of generally take during most weeks?
It depends. I mean, right now I'm doing less than I used to. You got family and everything, sometimes other things take precedence. And since we're volunteer, we're kind of on call 24/7, so I can go whenever. A lot of times I'll go at night. So it just depends. I mean, it might take a couple of hours a week, but then other weeks I might spend 10 plus hours, especially, or, if we go help out on a big fire where we spend a day or two.
Yeah.
I'm on the rural fire department too. So
okay.
That one on Moscow Mountain.
Yeah.
Not that far. Just this last year, I was there for a couple different times.
Wow. Yeah. Well, thanks for doing that.
Yeah, sure.
That's awesome. So how long have you been doing lending, been in the mortgage business?
Even longer. I've been doing loans. I started with American General Finance in 97. So just loans and finance for 25 plus years.
Okay.
And I started doing mortgage only in 2002.
Okay.
So been doing it a little while.
Yeah. So you're with P1FCU now, Potlatch #1 Federal Credit Union. Did I get that right?
Actually, now it's Financial Credit Union.
Okay.
Potlatch #1 Financial Credit Union.
So what's the what happened?
They took the federal charter away and went state chartered. And what that did is gave them a little extra leeway. There was some kind of limit on the federal. They could only expand so far with membership, and with the state, they were allowed to do more.
Gotcha.
And they really wanted to branch out into some of these underserved communities in like Washington, in Oregon, and a little further south in Idaho now.
Okay. Wow. That's great. How long have you been with P1FCU?
About 5 years.
Okay.
Yeah.
And you do mortgages, and I know you do a lot of construction. Is that kind of mostly your bread and butter, construction loans?
It is. Well, my title is actually construction loan officer.
Oh, there you go.
So that is my focus. But I mean, we've got a couple of us in the office, so I always end up doing much more. Or, referral business, obviously doing it a long time. I get realtors that'll call me up and I get a purchase because it's a referral. So I don't turn them away. I just do them.
Yeah. So what's before we get into some of the construction stuff, what's the difference? We were talking just briefly before, you've worked at some banks, bigger lenders, as well as the credit union. What's the main difference, like from a consumer standpoint, between credit unions and a bank?
Well, I think what I hear a lot is just that, people feel more appreciated. Where I'm at now at P1FCU, one of the reasons I went there is they had a real good reputation for taking care of their people. And that is a big focus. Excuse me. So at a credit union, it's member owned, and everybody who has an account is a member and actually gets a vote. So they have the board of directors. There's a vote on that by the membership. So members definitely have a direct say in how things are run, or at least in who they vote for, right? And you'll find that because the way it's run, I think it might be technically a not for profit. So they take the profits and disseminate them out. So that's why your rates are better at credit unions usually. So we have really good rates, treat our people well, people get paid well. All that comes from distributing that
Just
stuff out kind of thing. Yeah. Okay. And people, again, just talk about how much more they feel like appreciated, not just a number. When I worked at the big bank, I had a lot of complaints about people having issues and couldn't get anywhere that I always tried to help deal with. But
smaller organization overall. How big is P1FCU?
That's a good question. I don't know.
You said they're kind of expanding. So is it headquartered?
The headquarters is in Lewiston. Yeah. Okay. So they started there. That's where the Potlatch comes from, because they started as part of Potlatch Mill by some guys. Now they're not affiliated with them at all. But The excuse me, sorry.
Bless you.
So that's where they come from. The roots are from the Potlatch Mill. And now we've got offices down towards Boise, as far south as there, north all the way up to, I think, Bonner's Ferry is probably our furthest one north. But we can do, as far as mortgage loans, all of Idaho, Washington, and some of Oregon.
Okay. So fairly similar, like the products are pretty similar to other places in terms of these are conforming loans that get sold in the secondary market and all of that.
They are. So yeah, we underwrite to Fannie Mae guidelines on our conventional loans. But the nice thing about P1FCU, you ask what are the differences with the bigger bank, is our portfolio capacity. So if I've got a loan, like I had a self-employed guy just started, took over dad's business, wouldn't qualify for a conventional loan because he hadn't been there 2 years. Mm-hmm. But we did that loan because he had 20% down, and there's a couple different changes with that, like it's a 20% down, 20-year loan kind of thing. But the loan made sense from every other standpoint, and the guy had good credit, and the dad's history in the business was good, so we did it.
Yeah.
And we did a loan for that
So you
guy.
have some of that flexibility to lend out the credit union's own money portfolio, right? Mm-hmm. And so you can have some of that flexibility to help people out if it's the right situation.
Right. And that's where one of the big things that I've seen here is we've done loans that I never would have been able to do somewhere else because of some of that stuff.
Okay. Well, what about, construction loans, is that something you've focused on for a while, or is that a newer development?
Well, being a construction loan officer in title is new just in the last year, but
okay.
I've done construction loans back to Wells Fargo. So I've done construction loans for years.
So there's a lot of people, I know it seems like obviously right now inventory is super tight, right? Like that's one of our biggest challenges around here.
For sure.
And so a lot of people are looking at more at those options is what I'm seeing. Well, what about buying a piece of land and building, buying a lot, building? So it seems like that is a bigger focus. Can you talk a little bit about what people should be thinking about? What makes the construction loan process different? What are some things that maybe people can do if they're looking at a construction loan to, front load some stuff so that it makes it easier? Does that make sense?
Yeah, I think so. I mean, one of the big things when people come to me with construction ideas is I ask them what they're looking at price range wise. Have they spoken to a builder at least to get an estimate of what they're thinking? Construction costs now, of course, are skyrocketing, right? And so that it makes it tough because you want to build a house, but those costs are going way up too. So it's not maybe as advantageous as it was, a couple of years back, but you still get what you want, picking, the design, the layout, the fixtures, all that kind of stuff in a house that hasn't been lived in. And one thing that's good about our construction loan is a lot of times if they own the land beforehand, we'll use the appraisal value so they can get that instant equity if they already own the land or have equity in it or gifted land from parents or something like that.
Okay.
So I try to ask people if they've got some general idea of the numbers, right? If not, then we'll look at their budget, obviously, and figure out kind of where they can go. But having an idea, like maybe talking to a builder and getting kind of an idea of what you could build helps, because then we can say, okay, well, that's feasible or not feasible.
Yeah. So do you recommend that you mentioned bringing the land? So basically, if I understand this right, if somebody already owns the land, they can kind of use the land, the equity in the land, as their down payment, so to speak? Is that
they can.
the way to think about it?
They can. So somebody could do a construction loan with no money out of their pocket if they have enough equity. So because of that appraisal value, which is huge, they used to use acquisition costs, and a lot of places still do. They say, if this is how much it costs, that's the value, period. It doesn't matter if it appraises for more. So the fact that we'll do that is a big advantage for the member.
Yeah.
And they, Sorry.
Oh, no problem.
So one thing with that's key with construction is they got to have water in place. So if it's out in the country where there's a well, they have to have a well dug prior to starting. So that's one thing that gets people sometimes.
Can that be part of the
It
construction
cannot
loan?
be
though?
part of the construction loan.
Oh, okay.
So getting a land loan to do that, or buying the land first and figuring out the well, is what a lot of people will do.
Okay.
And
Is that something that P1FCU does, land loans?
they do, but again, our land loans still have to have water. So our land loans are
Okay.
25% down, 15-year loans, and you can do that, but our land loans require a well in place also. If it's in the city or city water hookup available, then you're fine.
Yeah, that makes sense. Well, that's a plug a shameless plug for my lots on Whoville. They all have water on them already. So
Yeah. So that's great. So then they wouldn't have to worry about that.
Yeah. So then somebody does that. They've got their land. They have ideally a builder they're already kind of working with, have some idea of it. How does that work from a loan process standpoint? You know, I think one of the things that's on a lot of my buyers' minds right now are interest rates, right? Is interest rates are going up pretty fast. Trying to get some so they can lock their interest rate. How does an interest rate work on a construction loan? Are you locking it now for the next 30 years?
We are.
You rolling it. How does that work?
Yeah, that's exactly what we do. So we're taking the 30-year rate that they qualify for. So right now that's 4.5 plus, starting on the 30-year rate. But if that's the rate they get, we say it's a 30-year rate. This is what you get. So if the rate goes up during the 12 months that they are doing their construction loan, they're fine because we lock that rate in, and that's the rate they get at the end.
Okay. So they can lock that now. And then how long do they have from when they start, close the loan, I guess, to when they need to have construction completed and be moving in, that kind of thing?
Typically, we want that done within 12 months.
Okay. So people need to have things fairly lined up when they're going at it.
It's tough because this environment's all crazy in the last year or two, with COVID and the delays. We're seeing projects take much longer than they ever have, or costs going up, so trying to have contingency, either built in or in savings is part of it, but also being flexible in the time frame. If we've done some modifications to take loans to 18 months at the end because they weren't done. So one thing we know with construction is we got to be flexible.
Yeah.
And more contractors or subcontractors are wanting paid upfront or more percentage, like cabinetry. Maybe you used to have to put 20% down. Now a lot of them are asking for 50% down, things like that. And you're seeing more and more of that stuff. So it's just getting a little tighter doing those loans. So our construction loans, we've taken back to 20% equity or down. If it's brand new and you're buying everything with it, you're going to bring in 20% cash down. If you got that land beforehand, like I said, it could come from the equity.
Use some of that equity. Mm-hmm. Okay. So 20% down, finish in a year ideally, but there's some flexibility. How did the construction loan process react to, or what changes have come into place with all these skyrocketing costs, where you guys have to start having more reserves and just budget more for excuse me, for overages? I know, so my dad's in the lumber business, and it's just so volatile right now, right?
Right.
Through the roof, things can change, especially if you're talking about over a 12-month build process, right? So is that just causing some complications for you guys, or is it more like, hey, well, the bank just is going to require us to have a lot more buffer now than we used to?
It is for sure. I had a guy on a construction loan. He had a $20,000 contingency. $15,000 of it went right off the bat in overage on trusses.
Whoa!
Right off the bat.
Wow.
We ended up modifying that loan and giving him $50,000, but because it was coming up close to a year, we reappraised the house, and it appraised for enough that he still had 20% more because of the way prices are going up. So that's just one example of the market. The the costs are going up, but of course, so then their values, right? So this guy's house just happened to appraise for more and it all worked out in the end. But it is one big thing we've cut back. We used to do 5% down. Nobody else did that. Now we've cut back to 20% equity because of those costs, because of things happening where somebody doesn't have the money and we have to try to figure out something for them. Like I said, we try to be flexible and help people out. I've got someone who's doing a manufactured home. The manufactured home company raised the price of the manufactured home on them after they agreed to it / purchased it, and they've raised it $10,000-$20,000.
Wow.
And that's just from them putting money down to waiting for it to be built and on site. So that's why we do that. And that's the biggest change you've seen is these costs just going up even after a contract's been executed. And they're coming back going, nope, I can't eat this. So that's why we've got that big buffer now. And we're more concerned about those reserve requirements now. Whereas we were fairly flexible on it. Sometimes people didn't need much in reserves. Now we're much more a stickler on if they have the reserves or we build it into the loan.
That makes sense. What about like, sweat equity? Is there, you have to have a contractor, right? Who you can't just build it yourself.
Yeah. So
Is that true?
We require a contractor on everything, even self-employed. Like actual general contractors, we're leery of doing because we've had some issues.
Okay.
People taking too long, right? If you're a self-employed contractor, it's not your priority to do your own house. It's to do the other ones that make you money.
Yep.
Right. So there's just inherent things that maybe you don't get it done very fast or whatever.
Is there room though for somebody to, if you say, to build my own house, or I'm having a contractor build it, but really like our budget's tight. We want to paint it ourselves or whatever. Like, is that stuff allowed in a construction loan?
Yes and no. There isn't much room for it, but like we don't mind if somebody does the painting on their house, and so it's kind of they would work that out with their contractor.
Gotcha. It's got to be budgeted. It's got to be a line item to have it done professionally.
Exactly, and then so if they have $10,000 for painting, and then the builder lets them do it, and in the end it only costs $2,000. Great, it's the contractor that's figuring all that stuff out. If they are like, I had somebody who is a licensed electrician, so when that's their profession, they're in that trade. We would let that guy do his own electricity. If not, we wouldn't let him do his own electricity.
Right.
But then, again, we'd still want that bid as a third party doing it, in case something happens and they can't do it. But then if it was $50,000 to do the whole house electricity and cost $10,000 in the end, great. The end loan gets modified to whatever the balance is. So if it's lower than what was anticipated, it just gets modified to that lower amount.
Gotcha. What do you now switch gears a little bit, because I'm sure everybody asks you this, like crystal ball, right? It's probably your favorite question, but do you have any sort of idea what rates are going to do, what people should anticipate?
Well, it's already gone past what I thought they were going to do.
What everybody thought. Yeah, no question.
I told people I didn't think rates would get above 4 before the end of the year. So that was wrong.
Yeah.
And
you said mid 4s, when you Google rates, it says 5 point something right now. Is that, what's the difference in rates? Is that because people can buy down to that level, or is there a huge difference in rates between banks? How does that work?
Well, there can be. I mean, rates are fairly similar on that stuff because people are pricing to these Fannie Mae, Freddie Mac pricing scenarios. And so there can be, and you can buy it down, so you can pay extra. Most loans will have a 1% origination fee, but then if you pay more, you get a better rate, or if you don't want to pay that origination fee, your rate's a little higher. So every loan can be tailored to somebody. If somebody has a lot of money up front, maybe they pay some extra to get a better rate and have a better payment in the long term. Or somebody else who doesn't have much down, maybe they do a little higher rate because the monthly payment isn't as big of a deal, but their down payment is.
Yeah.
So we can tailor that around. So that's what you see as far as the rates from different people. When you're Googling it, it's tough because a lot of that will come from like the Freddie Mac published rates, but that's already like week old information. So rates will come up to 4, and then that's going off of what the average rates that were 3.75 or vice versa.
Yeah, gotcha. So they're going up, but otherwise, nobody really knows what's going to happen.
Yeah, I think it seems like we're sort of plateaued out around that 4.5, 4.75 range. It had kind of gone up and come back down, and now we're back. It got all the way up to 4.75. We're back down to 4.5 or so right now. It's just hard to say. There's so much uncertainty in the world that plays into that.
Yeah. So what should people do? Are there some things that, especially like first time home buyers, that they should be doing, that they should be thinking about if they're preparing to get ready to buy a home this year? Is it paying off credit cards? Or is it so tailored that really they just need to come and talk to somebody and figure out what the best plan is to get them, where they need to be?
I would for sure say, go talk to somebody, whether you do an actual full pre-qualification or you just say, I'm looking to buy next year. Here's my situation. I've done plenty of that, just kind of financial counseling for people that were looking to buy next year. And I can look at somebody's kind of general numbers for them and say, well, here's kind of what you need to look at. So some people, again, if they have a lot of debt and they're not going to qualify for a certain payment, they might need to pay off some. But if the down payment is a big issue and that monthly debt isn't going to stop them from getting a loan, then I'd have them hold on to that money. So I do try to look at each one individually. I don't think there's a one size fits all. I've been doing this a lot of years, and I've definitely learned everybody's a little different. And I try to, even my best advice, I try to make sure tailor to each person and say, well, what are you looking for? What's your end goal? And try to make sure I'm working for the best thing that they need, not just what I think is best, obviously. So,
yeah. Okay. Good. Where can people find you? Are you at the office out here on 3rd? Or?
Yep, right there at the P1FCU on 3rd, or Pullman Road, technically, I think at that point.
Gotcha.
But,
yeah,
3rd in line. It's pretty easy to get online and find us too. You can do an application online. You can call in and talk to somebody in mortgage, obviously, pretty easily. But yeah, we have 2 or 3 loan officers in the local branch.
Very good. Well, thanks, Jason. Appreciate you coming in.
Yeah. Thanks.
It's been really helpful to learn more about construction loans. And like I said, I think that's going to be a much bigger need for a lot of people with just such low inventory. So,
yeah, well, I appreciate you having me come in for sure. And obviously, if anybody listening has any questions, just reach out. I think that's the big thing right now. There's so many questions. Don't be afraid to give me a call and ask, or ask you if you're working with another lender. Ask the questions. Anything you've got, ask.
I always tell people start early, right? It's like if you're like you said, maybe I'm planning to buy a house next year. Well, go meet with the loan officer.
Yeah, for sure.
They're not going to bite. And they're not going to charge you anything.
Right.
Like that's, get that process started, because we're definitely seeing now, it's like, it's so competitive that if your ducks aren't all in a row, you're sitting on the sidelines.
Yeah. Like you said, starting early, getting a pre-qualification so that if you find something, you can move fast. Yeah. Like you said, you got to be able to move fast in this market.
Yeah. Or maybe you can't. I know for a lot of people, it's the market's intimidating with the way prices are going. And so maybe you feel like you're priced out now, but get that roadmap, right? Figure out what's it going to take for me to get to where I can afford a home that's going to work for us.
Yep, for sure.
Good. All right. Well, thanks again, Jason.
Okay, thanks.
Thanks for joining us. Like, share, subscribe. We'll see you next week.